Have you ever seen it like this? The cacophony of news. We are 2% under a great bull market top, and people are miserable. Have you ever seen it like this?
The misery thing is the confounding factor. Given how much equity values have grown over the last 10, 11 years, the idea that valuations still seem reasonably attractive, especially compared to where interest rates are, I think is the compounding factor. It's almost as if those in the market haven't gone to look at their statements and understand the dramatic wealth changes that have taken place in the portfolio. And importantly, away from Wall Street and in Main Street, things are amazing. The U.S. consumer is in an amazing spot. The employment opportunities are vast. Their after-tax incomes are up. And they're facing lower prices across their shopping baskets.
How do you respond to the economic or pseudo-economic crew that say central banks, they're keeping rates up, they're trying to reflate. Part of that reflation is going into equity valuations, and it could all disappear like that?
I don't see, for us, the anomaly is possibly in the bond market, not in the equity market, given where long-term interest rates are. I mean, the confounding factor for us is the bond market right or is the equity market right?
Which is?
Generally, the bond market's right. And I think they better understand the long-term productivity that comes from technology. And the equity market's sitting there saying, I'm not willing to apply a 2% discount rate to valuations. And if they were, which I doubt they ever will, valuations would be significantly higher. Of course, the PE on bonds is over 50, whereas the PE on stocks is closer to 16. Against a backdrop that remains volatile, uncertain, but attractive.
But, Charles, what's your risk of a recessionary environment? I mean, if the bonds tend to be right, then you'd be looking at the inverted yield curve as a warning signal.
I think the risk of the recession is always on the table. There's no doubt we later cycle. There's also a question of how long can you stay late cycle? And the answer is longer than you can think, and not all baseball games end after 9 innings. Sometimes they go longer as teams battle it out. It's hard for me to imagine a recession in the near term against the data that we see today. And I'm hanging my hat firmly on this idea that unemployment in the U.S. is super low. And the key challenge corporate executives face today is finding the right skill set. So against a backdrop of strong demand, lower prices in the shopping stores, etc., low unemployment, it's hard to have a recession. You can talk yourself into a recession, which is precisely what almost happened around Christmas Eve last year. But away from that, the general narrative that we read about, whether it be Trump or trade or China, I think that's more than well understood by the market and more than well reflected by where equity valuations stay today.